Indian stock market, oh boy, free fall, right? I mean, did you see those numbers? The
Yeah.
Sensex just tanked almost 4,000 points.
Yeah, it was quite a day on the markets, that's for sure.
It really was. The Nifty 50 took a huge hit. And it felt like everything, especially the mid-cap and small-cap sectors, were just leading the charge downwards.
Yeah.
So what on earth happened on Monday, April 7th, 2025? And what does it mean for, for us, for our investments?
Well, that's what we're going to try to unpack today, right?
Mhm.
We've been digging into a lot of news and market analysis reports to really try and understand the story behind this crazy day.
Yeah.
So our goal today is to kind of cut through all that noise, right? To try and give you a clear picture of what really triggered this market event, what it could mean for the Indian economy as a whole, and then some really important things for all of us, especially those of us investing, to consider.
Yeah.
All without getting bogged down in the jargon.
Okay, so let's get right into that plunge. I mean, seeing the Sensex lose nearly 4,000 points is one thing.
Right.
But when you look at the broader market, the BSE midcap and small cap indices falling by as much as 10%, that really hits home for a lot of people, right?
Absolutely.
It's a huge chunk of value just disappearing. Poof.
Poof, gone, yeah. And it really does, I think, underscores the level of concern that we saw.
Yeah.
If you look at the India VIX, it's a measure of volatility. Think of it like the market's fear index, right?
Yeah.
It shot at 52%, hitting 21,
Wow.
which tells you that people are really uncertain about what's next, right?
Yeah.
We also saw market capitalization of BSE-listed companies, so that's the value of all those companies together, shrink by 19 lakh crore.
19 lakh crore. It's just unimaginable. But this wasn't just an isolated incident, right?
Right.
It felt like there were much bigger forces at play globally that set this whole thing off.
You're absolutely right. And it's kind of unsettling to think about how interconnected everything is now, right?
Yeah.
So the drop you saw in India was part of a global sell-off. And a major part of that seems to be the escalating trade tensions, primarily the U.S. and the new tariffs they're putting in place under President Trump.
So this wasn't just an India thing, right?
Right.
What other major stock markets around the world were also feeling the pain?
Well, Taiwan's market, the Taiwan weighted, took a big hit, down 10%.
Wow.
Japan's Nikkei index fell 7%. And even here in the U.S., the S&P 500 down almost 6%. The Dow Jones Industrial Average 5.5%. And the NASDAQ, which is really heavy with tech stocks, dropped over 5.7%.
So those are pretty significant losses.
Huge losses, yeah.
And it sounds like China's response to these new U.S. tariffs really added fuel to the fire. What exactly did they do?
So basically the U.S. slapped a 54% tariff on goods coming from China, right?
Yeah.
So in retaliation, China said, okay, 34% tariff on your goods. But they didn't just stop there. They also restricted the export of rare earth minerals.
Right, which are used in all sorts of tech products.
Exactly. They're crucial for a lot of different things.
Yeah.
They also launched an anti-dumping probe, basically investigating if CT X-ray tubes from the U.S., and actually India as well, were being sold too cheaply. And then they also imposed export controls on 16 U.S. companies. So it was a pretty aggressive, multi-pronged response.
And how did this back and forth between the U.S. and China specifically affect Indian businesses and the Indian stock market?
So, India isn't the main target here.
Yeah.
But global trade is so interconnected, right? When these big players like the U.S. and China are fighting, everyone feels it. We saw pretty significant declines, like 7% or so, in key sectors in India, like auto, IT, metals, pharmaceuticals, energy infrastructure. It's like a chain reaction. Tariffs on U.S. auto parts, for example, can directly impact Indian companies who make those parts and export them.
Right. Makes sense.
And those restrictions on rare earths. That can disrupt supply chains for everyone, even those anti-dumping probes on those X-ray tubes. That directly affects India. It's all connected.
It sounds like the market was still trying to figure out just how bad the damage from these tariffs was going to be. That uncertainty must have been a big factor.
For sure. The market hates uncertainty.
Yes.
Not knowing what the long-term impact of these tariffs will be.
Yep.
That made investors really uneasy. And you saw analysts scrambling, revising their economic forecasts. Goldman Sachs, for example, lowered its growth forecast for India for 2025 from 6.3% down to 6.1%.
Okay.
Citigroup estimated these trade tensions could shave off 0.4 percentage points from India's GDP growth. All of that just adds to the negative sentiment.
So it wasn't just about the immediate impact on certain industries, but also this fear that the trade wars could lead to a wider global slowdown.
Yeah, I think that's the big worry. These tariffs, they're basically like a tax on global trade.
Yeah.
Prices for consumers go up, companies' profits get squeezed. That erodes consumer confidence. People start cutting back on spending. JP Morgan actually increased its odds of a global recession to 60%, which is pretty significant. And even though India might not be directly targeted, we're such a big player in global trade, we can't escape a worldwide slowdown.
And this global uncertainty seems to have led to foreign investors pulling money out of the Indian markets.
Yeah, you're right. We saw foreign portfolio investors, the FPIs, resume selling in April. Remember, these are institutions from outside India investing in Indian markets. They were buying in March, but then bam, back to selling. Outflows of 13,730 crore from Indian stocks, just like that.
So they're basically saying, things are looking risky, let's get out.
It's a classic flight to safety, right?
Yeah.
When the global outlook gets shaky, investors pull back from emerging markets like India. They look for safer bets. And that uncertainty around potential India-US trade issues definitely didn't help.
With all of this going on, the Reserve Bank of India, the RBI, was actually scheduled to announce its monetary policy decision just a couple of days later on April 9th.
Right.
Must have been a lot of anticipation about what they might do.
Oh, absolutely. Everyone was watching to see what the RBI's Monetary Policy Committee, the MPC, would do. Would they cut interest rates? Would they announce some stimulus package to kind of soften the blow from all this? And then, hanging over everyone's heads, was this worry about the U.S. potentially slapping new tariffs, specifically on Indian pharmaceutical exports.
So investors were definitely on edge, weren't they?
Oh, without a doubt. The India VIX, that fear gauge at a 10-year high, that says it all. Everyone was asking the same question. Is this just a dip, or is this the start of something much bigger?
Right. Just a blip, a buying opportunity, or the beginning of a bear market.
Exactly. And that surge in the VIX to that level, that really showed just how uncertain and frankly scared investors were. But, there was this one interesting exception to all this gloom and doom. Indian pharmaceutical stocks actually surged almost 5%.
What?
Really?
Yeah, and that was because pharmaceutical goods were specifically excluded from those new U.S. tariffs.
Oh, right.
Companies like Sun Pharma and Cipla, their stock prices jumped, proving that even in a downturn, there can be winners. It all depends on the specifics.
It just goes to show you have to really pay attention to what's happening.
Absolutely.
So for those of us watching who maybe are feeling a little uneasy after hearing all of this, what kind of advice were financial experts offering during this time?
Well, I think the main message was stay calm, don't panic. Market corrections, they're normal. Volatility is part of the game. The worst thing you can do is panic and sell everything. Instead, take a deep breath and look at your portfolio. Are you invested in companies with strong fundamentals, solid business models? Those are the ones that will weather the storm.
Right.
For those who invest regularly through SIPs, systematic investment plans, the advice was usually keep going. Actually, when the market falls, you're buying more units at a lower price.
That's the buy low strategy, right? Exactly. It can really pay off in the long run when the market recovers. And of course, having an emergency fund is always crucial. That way you're not forced to sell your investments at a bad time just to cover unexpected expenses.
What other important advice was being shared?
Well, it's important to know your own risk tolerance, right? If you're losing sleep over market volatility, maybe adjust your portfolio, make it a little more conservative.
Yeah.
And if you're really unsure, talk to a financial advisor. Don't make decisions based on rumors or what you see on social media. Stick to your plan, stay informed, and don't panic.
It's reassuring that the focus was on being rational and avoiding those knee-jerk reactions.
Definitely.
Were there any historical examples that experts were pointing to provide some context?
Yes. There was a lot of talk about past bear markets that were triggered by policy changes, similar to these tariffs. And those often saw V-shaped recoveries, meaning a sharp drop followed by a quick bounce back. Because often the underlying economic fundamentals are still strong, and once that initial shock wears off, confidence returns. Some even saw this drop as a good opportunity to buy quality stocks at lower prices, especially since this downturn seemed more driven by policy fears, not a decline in companies' actual earnings.
So let's talk a little bit about some of the specific company news that was happening amidst all of this.
Okay, sure.
It wasn't just about the overall market indices moving. What were some of the individual stories unfolding?
Oh yeah, definitely. So IRETA, the renewable energy financing company, their board had a meeting scheduled for April 15th to look at their financial results. And as we talked about, the small and mid-cap indices, those took a beating, big falls. Edelweiss Financial Services announced they were raising 2,000 crore through a public issue of NCDs. That's a type of debt instrument. The Indian rupee also fell against the US dollar.
Adding to that sense of uncertainty.
Right. Flight to safety, people move to the dollar when they're worried. Tata Steel India actually reported an increase in crude steel production, and JSW Steel also saw higher crude steel production.
So some positive news on the production front.
Yeah, there are bright spots. It wasn't all bad news.
And how did individual stocks in the Nifty 50 fare?
Oh, some big losers were Trent, the retail company, and Tata Steel.
Okay.
Siemens actually gained quite a bit, which is interesting. That was mainly because they were spinning off their energy business into a separate listed entity.
Oh, right.
It shows how company-specific events can still have a big impact, even when the market is in a downturn.
Yeah. So we also heard from some business leaders and market analysts, right?
Right.
What were some of their thoughts on the impact of these tariffs and just the overall market situation?
Well, Jitendra Srivastava, the CEO of Triton Logistics, he was concerned about the negative impact on Indian exports, especially auto and pharma.
Makes sense.
And of course, logistics get hit too, with higher shipping costs and all of that.
Yeah.
Manish Jain from Mirae Asset Capital Markets, he was cautious, saying, keep investing systematically, but maybe hold off on big lump sum investments for now. He thought better buying opportunities might pop up.
So kind of a wait-and-see approach.
Yeah, exactly. A GCRI report suggested that India's exports to the U.S. could decline because of the tariffs. Shishir Bayal from Knight Frank India, he thought the RBI might cut interest rates, which would be good news for real estate, making borrowing cheaper. Vishnukant Upadhyay of Master Capital Services, he acknowledged the volatility but saw long-term opportunities in finance, oil and gas, consumer goods, FMCG.
So some optimism there.
Yeah, definitely. And Pranay Agarwal from StocksCard, he basically echoed that, stay calm, see the opportunity in the fall.
So overall, a mixed bag of reactions, but a sense that this might be a buying opportunity for the long term?
Yeah, I think that was the general sentiment. But, speaking of specific companies, Tata Motors took a big hit. It was mostly because Jaguar Land Rover, their subsidiary, paused shipments to the U.S. because of those tariffs.
Oh, right. Directly impacted by the tariffs.
Exactly.
Yeah.
And to put this in perspective, this wasn't just an India story. The MSCI Emerging Markets Index, which tracks stocks in emerging economies worldwide, it saw a big drop, its biggest single-day fall since 2020. And the Hang Seng Index in Hong Kong also fell significantly.
So this global trade war was having a ripple effect across emerging markets.
Exactly. It wasn't just India feeling the heat.
But there was one interesting approach we heard about from Taiwan's president.
Oh yeah, Lai Ching-te. He actually offered to talk to the U.S. about zero tariffs, basically completely removing trade barriers.
Wow, that's a pretty bold move.
It was. It shows that not everyone was choosing to retaliate with their own tariffs. Some were looking for other solutions.
And what about the U.S. Treasury Secretary? What was their take on whether these tariffs might actually lead to a recession in the U.S.?
Well, Scott Bessent, he said he didn't think they would. He pointed out that over 50 countries had actually started trade talks with the U.S. So he was seeing the tariffs as a way to push for better trade deals, not necessarily a path to recession.
So a different perspective from the market's initial reaction.
Yeah, definitely.
And finally, we heard the term Black Monday being thrown around a bit. Can you remind us what that refers to and why it was relevant here?
Black Monday usually refers to that huge stock market crash on October 19, 1987, when the Dow Jones in the U.S. dropped over 22% in a single day. It was a massive event, had global repercussions. People were bringing it up now because of those sudden drops we saw, the uncertainty around trade policy. It brought back memories of that panic. And, the U.S. market had its worst day since the COVID crash, just a few days before all this happened. So it was a stark reminder of how quickly things can change, how vulnerable markets can be.
So just to sum it all up, the Indian stock market crash on April 7th, 2025 was primarily driven by those escalating global trade tensions, those new U.S. tariffs, that triggered a global sell-off and fueled those worries about a possible global economic slowdown.
All right, that's a good summary. The direct impact on India might have been limited to specific sectors, but the global financial system is so interconnected. We're all part of this global marketplace.
Yeah, those foreign investors pulling out, the anticipation around the RBI's response, it all added to the volatility.
For sure.
And it shows just how quickly events on the other side of the world can impact your investments.
It really does. And it highlights how important it is to stay informed, not just about what's happening in India, but globally.
Yeah. You have to consider all those different perspectives when making your financial decisions.
Absolutely, especially in today's world. You have to understand how global trade policies, international relations, all those things, how they impact the economy, the markets, your investments.
Right. You can't just focus on what's happening in your own backyard anymore. It's a global game now.
Yeah.
So this whole event, this market drop, it raises a really important question for all of us. How do we prepare for these kinds of global shocks? How do we make our investments more resilient?
That's a great question to think about. Maybe it means looking at sectors that do well in uncertain times, or really understanding those international trade agreements and how they affect different industries.
It's about being proactive, right? Not just reacting, but anticipating and adapting.
Exactly, taking control of your financial future.
And if you found this deep dive into the Indian stock market crash helpful, and if you haven't already, please subscribe to our channel. We'll keep bringing you more in-depth analysis and insights to help you stay informed and navigate this crazy, complex world. We really appreciate your support, and we'll see you next time.
Thanks for watching.